Hello traders, welcome to Price Action Real Traders. So today is another new video on how to identify engulfing zone. This is part 2. So we are going to continue. We are on how to identify engulfing zone in strong trend. So this is part 2. So as I have told you previously, before you trade touch on engulfing zone trading strategy, you have to identify this trend first. Like here you see we are in strong downtrend because of the alignment of EMA. So if you see this, immediately if you see engulfing, then market will reverse. Like here you see this is engulfing, you see market touch or reject, you see market reverse. Here is another engulfing, here you see market touch and reject, then market reverse. Then you can trade breakout as well. You see here, this is the first engulfing zone. You see market touch this zone, rejection, then you see market reverse. Here is the second zone, market touch, you see market reject, touch reject, you see market reverse. Then when market close at the zone or break the zone, you see here market has broken this zone, this engulfing zone here. You see market break or close here. Here this is the zone. You see market close inside the zone, you see market reverse here, because this is the movement. You see here we are in strong downtrend, then you see retracement, immediately you see engulfing. So when market come to this zone and reject, then you place your trade on the next candle. You see here is doji, but if you have good marginal of safety, you can place your trade above here, you can win. After this doji, you know definitely market must go down, then you place your trade. Then here the second zone, you see market touch, this is these two candle engulf this hammer, then market touch and reject, then you see market reverse here, then you wait for market to come above. You see here this is the first zone, so the whole area here is the zone from here to here. Then you see market close at this zone, inside the zone, then you place your trade put option. Then you see market break the zone as well, then you place your trade put option. So I told you, if you have strong trend, you can trade the three concepts: touch, you can trade close, you can trade breakout. So you have chance to trade the whole concept if you have strong trend. You see here is strong trend, so you can trade here, you can make your trade here, then you can trade here, you can trade here, and you can trade here as well. You see within how many minutes? From here 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 minutes, you have 4 trades. Within 16 minutes you have 4 trades in this zone. So this is the way that you will identify the strong engulfing zone in strong downtrend, because in strong trend engulfing zone work 90%. Engulfing zone work 90% in strong trend. So that's why if you have strong trend, as soon as market touch, you can place your trade. You see here, this is another strong trend here. This is strong trend. You see market go up, down here. So you see this is the engulfing. This is the engulfing. These two candle engulf these two candle. You see market touch here, you see put option. You see market touch again with rejection, you see put option. And here as well is another zone. Here the whole area here is the zone. You see market touch, you see rejection, doji. If you are in strong downtrend, as soon as you see doji after market touch, then you place your trade, or you can place your trade as this doji if you know how to enter with marginal of safety. Then you see here market close inside the zone, you see put option, another put option. So if market break the zone, then you can place put option as well. So this is very, very simple and is very, very profitable. You see here market break, you see here, this is the zone here. Here is the zone, this round number. Then you see market break the zone here, you see put option. Why this one didn't reverse? As I have told you, if you see hammer and spinning top, don't place your trade. It's continuation sign. Market will add one more candle. If you see hammer and spinning top, it's continuation. Don't place your trade. Wait for the next candle. This is hammer candlestick, this is spinning top candlestick. That's why you see market and you see gap down. So that's why you see market go up, then it reverse after breakout. So don't place your trade immediately after this spinning top. You wait for the next candle. So I have explained it in my live trading video on engulfing zone trading live. If you watch it, you will understand very well. So you see here market break, then you see put option, because you have strong downtrend, you have strong trend. So let's check another one. All here you see the alignment of EMA 200, 100, 50, 20. So this is strong downtrend. So if you see engulfing here, then you see here this two candle, you see engulf this green candle. So here, from here is your zone to here, this is the zone. You see here, from here, this area to here is the zone. So so you see market here go up close at zone, you see put option, market reverse. So when market break this zone, then market will reverse. So this is the way that you will identify the engulfing zone trading strategy. Is very, very simple. So let's check another one. You see here is strong downtrend here, strong downtrend. So this is the zone here. You see here market up, you see retracement, then you see engulfing. Then you see market go up, then here is your zone, this round number, this is the zone. Then here as well is the zone. Then you see here, you see market touch, reject, you see market reverse. You see another touch, rejection, you see market reverse. As soon as you see market touch in your strong downtrend, if you have strong trend, when you see touch and reject, then you know market will reverse. And here you see market go up and close inside. So market is supposed to reverse after, even though this is hammer. You see spinning top and the hammer. So you have to wait maybe for the next candle. It may reverse, but you have 50-50 chance here. So you have to wait. If you see hammer spinning top or spinning top hammer, so they are continuation, anything can happen. It can break, it can reverse. So wait for the next candle. If it's reverse, so just you didn't lose, don't place your trade. So you wait for the next candle. You see next candle. You see, as I have told you, you see hammer spinning top. Then you wait for the next candle. You see the next candle, you see market reverse. You see, so anytime you see hammer or spinning top, don't place your trade. Or you see hammer and the spinning top, don't place your trade. You see here, this is the zone here. After market break the zone, it creates spinning top. It's continuation. then it create hammer as well. It's continuation. Wait for the next candle. You see, immediately after next candle, you see market reverse. Then you place your trade. If you see hammer spinning top, wait for the next candle, then you place your trade. So it's very, very simple. Very, very simple. Just try to identify. Just try to identify. It's very, very simple. Let me pause. Somebody is locking the door. Please, 1 minute. So I'm back. Let's continue. So let me show you in uptrend. I have showed you in downtrend. So here you see this is the uptrend. This is the strong uptrend. You see the element of the EMA. You have 200, you have 100, you have 50, you have 20, and the price is above. But here you see its low volume is like consolidation area, but we will come and do consolidation area engulfing trading strategy later. So if you see this type of market, don't trade. It has its own trade strategy. I will come and explain later. Let's check another one, because now I'm showing you strong trend. So if you see bad market, don't trade. Always bad markets can make you to lose a lot. So maybe I will do video about how to select good markets to trade engulfing zone trading strategy. So I will explain maybe how to, in some video I will explain how to identify good markets so that you can be able to trade this strategy. You know, any strategy needs good market condition. Any strategy need market conditions. So all here you see is not nice, only downtrend. So we are looking for good uptrend. You see all the market is bad. Let me change another pair to get good one. Yes, here. So here you see here, this is strong uptrend. You see here, this 100, 200, 100, 50, 20, and the price is above. So here you just try to see where it's engulfing, then you draw your zone. You see here market is in strong uptrend, market come down, then market engulf this green candle. Even though it's not very strong engulfing, but it work. You see here, you see after market engulf this candle, so you draw here, then you draw here. So this is your zone. You see market close as zone. You see call option, even though it's dodgy, but the next candle, as I have told you, if you have strong trend, if you see dodgy at engulfing zone, then you place your trade. You see market reverse. Then here is another zone. These two candle engulf this red candle here. You see, engulf this red candle. Then you draw like this here and here. Then you see market here close here with rejection, small rejection. Then you draw like this here, you see market, market rejects, then market come back here, touch with small rejection, you see market reverse. You see another rejection, you see market reverse. So here you see You see here, this is the zone here. Then you draw like this. You see, you draw like this. Then you draw like this. Sorry, with this red candle like this, yes. So you draw like this, and you see market come close inside. You see market reverse, even though there is gap here, is low volume this area, so you have to be careful. That's why you see this candle, this rejected candle supposed to reverse, but because of the gap, you see gap here, there is gap again here. So anytime you see gap, be careful or don't trade. If you see market is too much of gap, just don't place your trade. So let's check another one, hand like this area. Now here is ranging from here. This area is the zone here. It's a zone here. You see 200, 150, 20, the price is above. So here, this is the zone here. You see engulfing, this 3 candle engulf this red candle. So you draw like this. You draw like this. When market touch rejection, call. Close here, call. Break here, close inside here, call. Break here, call. Here is another. You see engulfing here. Then you draw like this. I'm coming. You see engulfing here, the whole area here. This is 2 engulfing zone. So you draw the 2 from here to here. This is your zone. So you see market close. Coming. Let me zoom it very well. Yes, so you see here, you draw like this. Then you draw like this. This is a 2 engulfing zone. You see market. You see, if you see tiny candle, you see here is spinning top. Here another spinning top. You wait for the next candle. Then you see market reverse. If you see 2 spinning top, 2 hammer, spinning top and hammer and spinning top, don't place your trade. Wait for the next candle. You see here, this is spinning top. Here is another spinning top. Then you wait for the next candle. Then market will reverse. So here is the uptrend, but this market is low volume. So if you see small candle, don't trade, because even if you enter, it will create small candle, you will lose. If you place your trade, market may create weak candle, then you lose. Then here, do you see any engulfing here? Yes, you see, even though it's very tiny, this, you see this red small candle, this very small candle. Yeah, sorry. Then you draw like this. Then you draw like this. You see market close, market reverse here, close inside. You place your trade call option. You see market reject, then you place your trade call option here. So you draw here again, this area and this area. You see market reject, you see call option. You see reject, you see call option. You see reject, you see call option. Even though it's low volume, no good candles here. So in this situation, you have to be very careful. Anything can happen, so it may fail you. So try to look at good market As I have told you, I will try to show you good market condition, which market you're supposed to take your trade. And you see here is engulfing. This is engulfing. So here, let me show you. You see this zone, you draw like this, then you draw like this. Then you see here, you see markets touch here, you see call, touch with the rejection on this doji. You can place your trade call option with good marginal of safety. Touch again, you place your call option. But here you see spinning top here, and you see this candle, a strong candle, and you see gap. So if you see gap, don't place your trade, as I have told you, because if you see gap, market will not reverse. Then you see market break. This is another spinning top. Then you see hammer. See spinning top, this small spinning top. Then you see hammer. Wait for the next candle. Then market will reverse. Wait for the next candle. Then market will reverse. In this situation. So you see here, as I have told you, try to identify the candles. If you see too much gap, don't place your trade. If market wants to break any level, it comes with gap. It comes with gap. You see here. Anytime market wants to break level, it will start gap. You see here, then you see gap here. You see, then you see gap here. Then market come down, you see gap here. You see, then after this 1 2 3 4 candle, then you see spinning top, don't place your trade. You see another gap, then you see hammer, don't place your trade. But here is another hammer. But if you see spinning top and hammer, if you see another hammer, market will reverse. If you see spinning top and the hammer, then you see another hammer, market will reverse. If you see hammer and another hammer, you wait for the next candle. If it is spinning top, market will reverse. If you see 3 1 2 reversal candles, then you see another reversal candle, market will reverse. If you see 3 continuation candle, then you see another continuation candle at the level, market will reverse. Because of this, you see here, this is round number. That's why market reverse here. Otherwise, market will still go down. So anytime to try to identify the trend, how trend is coming. If you see trend is coming with gap up or gap down, just avoid any trade. Don't place your trade. Let me show you one more, then I will stop the video. I don't want it to be too much longer. As you see here, you see 200, you see 100, you see 50, you see 20, and the whole price is above. Then this is, you see engulfing. Then you draw like this. You just draw this one, then you draw like this again. So you see market touch with rejection, you place call option. Then you may wait for market to close here, inside here, then you place call option. Or you wait for market to break, you place call option. So you see here, this is the zone here, this is the zone. You see here, you see market close inside, you place call option. You see, so this is the zone. Here you place call option because of strong uptrend. So let's check another one. all here is not good market. See too much downtrend, no strong uptrend, only downtrend. You see uptrend here. Here is another. You see strong uptrend here. So you draw and you just identify engulfing. What do you see engulfing here? Here is the zone, and here as well is the zone, and here you can just draw like this, So if market touch this zone, you place call option. Market touch this zone with rejection here, you see market here no rejection even though there is no rejection, you see market reverse. You see market reverse, but here market you see rejection, then market reverse here. Then you wait for market to close inside here, then you place your trade, or market break, you place your trade. You see here market touch again, you see reverse, then you see market. Let me draw so that you can see. You see here is the zone, here you see market break, you place call option. Market touch here is rejection, you place call option. You see market, so if market close inside here, you place call option as well. Then here as well, this is another zone, you see. So here you have confluence, market touch here and break here, so you have almost 100% because you have two engulfing zone. Market touch this zone and break this zone, so here you see you have 100% sure that market will reverse. Here you see market reverse, market come reverse again. So in this situation you can trade safely because you have confluence, you see. That's why you see, because of the confluence, market is reversing over and over again. Here you see here, because of this zone, you see this zone, sorry, why this zone here, because of this is zone here, then here as well, and here as well. So you see here you have confluence, this is the zone, this is another zone, market touch reverse, close here, you see market reverse. So this is the way that you'll identify engulfing zone trading strategy. Is very, very simple. So this is the end of this video. If you have any question or suggestion, please drop it in this comment section. So if you didn't subscribe my channel, please subscribe. If you didn't like my video, please like it, share, comment. I will say thank you. Bye bye.